All right, Bulls and Bears, BX4 News back in the building. Ride the bull, prepare for the bear. Economic news, folks, economic reality. Let's go ahead and get into it. The economy just took a dire turn to the dark side, folks, and we're going to get into economic reality here. And no, I'm not just saying this because of the current administration, because I'm against them. I'm not against them. I'm not for them. The previous administration, not for them. Somebody could come down from outer space and take office and become our quote-unquote leader, and it wouldn't matter. I would still give you the economic reality based on what? Facts, data, right? Statistics, numbers, proof, information, evidence. Let's go ahead and get into it, folks. So is the economy, have we made it great yet? It's been, what, 2 months since mid-January with the new administration. It's been over 2 months. Have we made the economy great? Is everything on the upside, so to speak? Well, prices are on the upside. We saw another uptick in inflation. And if you want to ask if someone feels like things are great, take a look at this right here. Elderly woman evicted from home, has nowhere to go. In Sault Ste. Marie, Michigan. Wow, that could be very cold if she ends up on the street there. She lived in an apartment for 24 years and paid $686 a month for rent. Soon after the apartment building was taken over in 2023, a new landlord showed up and handed her a notice to end her tenancy. So there you go. So even elderly people are not safe with a safe place to live. Oh, JJ, that's just one example. She's the only one that's having problems. You really think so? Multiply her by millions, folks. Take a look at what's happening now with the eviction picture. And Google AI sums it up very well. Eviction filings surge across the U.S., with some cities now seeing increases of over 50% compared to pre-pandemic. Not pandemic levels when everything was going crazy, but pre-pandemic levels when things were supposed to be fine. Back then, we were told the economy was strong. So we're now 50% above that, fueled by rising rents and the lack of affordable housing. And many eviction filings are related to non-payment of rent. Go figure that. So, folks, no, it's not just the lady that we talked about at the beginning. This is happening in the millions and millions and millions of cases. And remember, this would have happened 4 years ago if it weren't for all the non-organic interventions in the economy with all the life rafts that were thrown out to people. They had to keep this from imploding. And what are they going to do this time? Well, it looks like they're just going to let things implode. We're seeing cuts to food banks. We're seeing cuts to agencies. Many people losing their jobs because of cuts. And we're going to get into more of that in a little bit here about the cuts here. But, folks, this is economic reality, folks. Things are getting a lot worse, and they're only likely to get even worse going forward because nothing's being done to really change things. In fact, a lot of the life rafts are being pulled out of the water right now. And, folks, there's hundreds, maybe even thousands. I didn't scroll through all these search results, but there's dozens of new ones every day of record high evictions. And we'll just look at some recent ones here over the past few months. Franklin County evictions all-time high. Maricopa County all-time high. Let me get some more recent ones for you. Right, and some of these were a few months ago, so you can't just sit and say that everything's just happening now. This has been a steady trend, folks, for a long time now. Denver evictions, record high. We see here number of homeless people in America hit an all-time high. That was in January when they got the 2024 numbers. No-fault evictions, highest level in 8 years. As Renters' Bill of Rights is looked at here. That last one was out of the UK, actually. So it's not just the U.S., folks. So you can't just sit here and say it's a leadership problem. Again, it's global. This is a issue caused by the money creation, and that's the backbone of it all. So that's why I keep saying a new administration is not going to help. In fact, we're going to talk about spending here in just a minute. That just got worse. We're supposed to be cutting, but we're actually spending more. And I'm not joking. We'll talk about that here in a minute. But here's just a few more. Houston, rising evictions. San Mateo County. Travis County, record number of evictions. Let's see here. Middle-class New Yorkers, evictions are rising. Folks, it just goes on and on and on, folks. So nothing's being done to fix this, folks. The cost of living continues to get worse. Unaffordability continues to get worse in housing. and we're told, that things are going to get better for most people. And again, we're only 2 months in. Maybe things are going to drastically change, but really, do you think things are going to change the way things are being handled so far? Do you think things are actually going to change? And there's going to be more job losses, but still rising prices. And stagflation is actually right on the doorstep, folks. And even the stock market has been pretty bad, and a lot of holders of stocks are getting whipped around pretty hard. Walmart, described by Barron's here, Walmart gets more bad news. Consumers are losing faith. And we see Walmart stock get beat up pretty good here, down to $85.15 as of recently. And let's zoom in here on a chart if we can. Let me move myself over here. And look at this, folks. We're down, just looking at a 1-year chart here, we're down from that peak of over $103 just back in February, now down to $85. That's a pretty big haircut. Is that 25% yet? It's getting close to that. And anything over 10% is considered a bear market. Well, if we just look at Walmart stock, expand that across the economy, because Walmart's a pretty good indicator of what's going on. So it's definitely a bear market. The bear is starting to roar. People thought I was perma-bull. But what did I say right here on this channel over the many years? I said you start pulling away money out of the economy and things start dropping. You also have the billionaires that pretty much control the stock market also ready to hit the sell button, even on a higher level. And when you look at charts here, and I've said this many times as well, patterns can be very, very indicative of what's going to happen, folks. Look at this pattern going out to a long-term chart here, like over 30 years. If you're looking at this right now, and if you see all the way here ever since 2020, when it really started spiking up in 2022, nearly vertical, folks, nearly vertical. If you think that was normal, and let's just go back to 2020, it was in the $30 range, folks. Going into 2020, early 2020, just under $40. And then we spiked here, nearly vertical. Do you think that was sustainable, right? Do you think that was sustainable? Look at the history. Look at even the 2008 financial crisis. It wasn't that big of a jump. It went from $15 to $19. That was a financial crisis, the height of it. Then it dropped back down to 16, folks. You haven't seen anything yet. I think this stock's going to go down to $40 or $50, right? And I warned people here months ago that we're going to see some big changes coming up here. And a lot of you got out, and I get messages from people every day saying, wow, how did you know the top is in? Folks, the house of cards is crumbling, and the administration right now is actually pulling cards out from underneath. It seems like on purpose, right? They've got to know that this is going to be major disruptions with all these cuts and everything else. But it wouldn't shock people. It probably would shock people to find out what's actually happening with spending. Even though we're being told that cuts are happening, spending is on pace to outpace last year. Let's go ahead and take a look, folks. This is crazy. And Market Watch gave us a nice little article on this and a nice chart here. The current administration claims that spending is going to be dropping, but actually we're outpacing the previous administration. And let's bring up a chart here. Federal spending in 2024 and 2025. Zoom in here a little bit. Let me go down here so you can see it. 2025 is the green line, and so far we're outpacing 2024. So what are we spending it on if we're cutting all these agencies, if we're cutting? And I told you here on this channel, I said we're actually not, because we saw the debt levels are actually increasing. The rate of increase is it's going faster. It's increasing faster. The levels of debt are going up faster. Not only is it not coming down, it's still going up, but it's going up faster than before. So what's going on, folks? We're being told a big truckload of BS. I mean, let me know what you think down in the comments. I mean, how else can you look at this and say that something's not fishy going on here? And it's getting very interesting, folks. Look at this out of Realtor. Adult children are tapping into the bank of mom and dad more than ever before. So it just got worse. What is it, 50% here? There's no denying that owning a home is expensive and that everyone might need some financial help now and then. However, a growing number of people are tapping into cash flow Others might argue should be cut off. That's mom and dad. Turns out 50%, folks, 50% of parents are financially supporting at least one of their adult children. So you think your kids are out of the house, 50% are supporting at least one of their adult children. Pretty sad, but that's what's happening. And it just got worse, right? So everything still seems like it's getting worse. Let's talk about unaffordability in housing and what's happening with rents. And this is out of Housing Wire. And even though the first quarter isn't done yet, we've got the first quarter numbers here. They're just going to figure the last 3 or 4 months of March. It's not really going to change much. So housing affordability worsens in the first quarter. So it just got worse, folks. We were told things were going to get better, things were going to get easier, but it just got worse. Nearly all analyzed counties require historically high portions of wages to purchase median price home. And it goes on here in the first quarter, affordability report says 97% of analyzed counties now require historically high portions of wages. And it goes on here asking us to subscribe, but we're not going to do that because we already knew this was going to happen, and this is no surprise and no shock because nothing's really being done to change the trajectory. Now, if enough people get evicted, like the elderly lady that we talked about at the beginning, and it's not just renters, by the way, either. Homeowners are really struggling as well. And people say, well, home ownership, that's the American dream. Folks, owning a home is like renting. It's just maybe you pay a little bit less, but try not paying your property taxes and see how long you're a, quote, home owner, right? And you're never actually going to own it. Moving on here, student loan delinquencies, record high. After all the forgiveness for all those years, it's now at a record high. So another example of things continuing to get worse. Let's listen to this report right here real quick.
Over $9 million in 9 million student loan borrowers could see their credit scores tank by more than 100 points this year. Student loan delinquencies are also set to hit record highs. CBS 47's Jason Toktajian spoke with a local financial advisor on what this means for borrowers and the economy.
And they show the money being printed. I bet a lot of the student loan people or people that are under student loan debt, they're looking at that printer and they're probably saying, why can't they print the money to pay off my student loans? Or why can't they just hit the delete button on their student loans? That's what a lot of people are saying. And it's interesting, though, that you can send money all over the world to fund foreign interventions and fund wars, but you can't pay off certain people's debt. Now, not that I'm against for just people getting their debt erased. I think people need to learn a lesson and maybe pay back their debts. But you also, at the same time, you have to scratch your head and say, why can we send trillions of dollars, again, all over the world, but people in the U.S. don't get their stuff paid and are struggling? Right? And more fears of rising inflation. Remember, sticky and transitory inflation, those things, are starting to scare the markets. The Dow Jones lost 700 points just on Friday, the 28th of March. And what are we seeing here? Well, we're seeing more inflation and fears of further inflation with the tariffs. And we even have the dreaded S word, folks, being talked about, stagflation. Axios, stagflation warnings abound in spending, inflation, and sentiment data. Consumer confidence just plunged to a 12-year low. People are feeling the crunch, and they're stressed out. Even Walmart came out and said that. We just talked about that with that earlier report. Walmart said shoppers are stress spending, meaning they're spending less, and they're spending more on necessities. And this has to do with the personal consumption index price indicators. And what we're seeing here is more red flags, more warnings. Even, is that Benjamin? Even he's crying. Look at that. He's stressed out. He's sweating. And when he's sweating on the dollar bill or the $100 bill in this case, is it the 100? Gosh, I've been using credit cards for so long now. I haven't used cash in so long I forgot. Yeah, it's a $100 bill, right? I use so many credit cards, folks. I don't think I've touched a bill of cash in maybe a year. Well, no, I gave my daughter a little bit of money for a present, so I guess I did touch some cash. But as far as buying things, I don't think I bought anything in cash, which is bad because small businesses, they have to pay those fees when you swipe credit cards. I really should use cash more often. But what do? They entice you with points. The credit card companies, they say, oh, you're going to get points, you get cash back, you get, maybe a discount card after 3 months of spending, you get $10 to spend at a store or something like that. They entice you to use those cards with little, 1%, maybe 2% cash back, 4% if you're lucky. I think the Costco card, if you buy gas with the Costco card, I believe it's 4% cash back. That could have changed, but I think when I got the card, that's what they told me. So they give you these little rewards, these little incentives and perks to use the credit card, and then less people using cash now because they want to get the perks. And then all the businesses have to pay these fees now because less people are using cash, more people are using the cards. Pretty interesting how they really get people roped into just using cards, isn't it? And it is more convenient. You don't have to count out the money. And then when you're touching the money, aren't you thinking, like I'm thinking, how many thousands or millions of people have touched this money? And where have their hands been? You know what I mean? Where have their hands been? And they touch the money that I'm touching. I'm just going to use plastic. I'm just going to use a card. But just more into the numbers here. Core inflation in February hit 2.8%, higher than expected. And folks, are we ever going to see prices come down? Not slower inflation. Slower inflation doesn't really help much, does it? Because prices are still going up, just at a slower pace. You guys know this. Most of you know this, right? We need deflation. We need a price correction. But when that happens, then really things really start falling apart then, because you think job losses are bad now with the cuts. When deflation happens, when price levels start coming down, then is when the panic button really gets pressed, and you haven't seen anything yet. I mean, all these records that we're setting and bad numbers in this economy are nothing compared to what could possibly be just around the corner, people. And look at this, folks, what they're calling heartless and dangerous proposal to automate the VA call centers, part of aggressive layoff plan. So now veterans and people with health plans through the VA are going to get a robotic voice or an automated menu when they call instead of a live person because of the cuts. And you think these veterans are going to be in a mood to go through an automated menu or a robot voice when they call the VA? I think not. I think there's going to be some very angry people on the phones, and probably slamming their phones down, maybe even stomping on their phones. The layoff plan at the VA would also affect medical and healthcare staff support administration roles, including HR personnel and regional and central office staff, including those in strategic planning and procurement, according to sources in the agency and on Capitol Hill. The VA is also working with the Department of Government Efficiency to cut costs and identify contracts to cancel. So the cuts are people getting their jobs cut, and it's jobs that are there to help people when they need VA healthcare, it looks like. And overall, what's been announced so far is going to be about a 20% shave off of the VA workforce, bros. That's pretty significant. On to more news here. Food banks. Food banks being cut, folks. Funding being cut. California food banks brace for funding cuts. And let's see here. USDA cuts over $2 million worth of food typically scheduled for Massachusetts food banks. Truckloads of food bank aid earmarked for California. A Nevada food bank short 1.3 million pounds of food after administration freezes. $1 billion in food aid cuts hurts California schools and farmers. Halts millions of dollars deliveries to Oregon food banks, folks. It's all over the place. I even heard that schools are not getting a lot of their food that they were supposed to get here. No, I was actually going to show you the screenshot of this, folks. California food banks right here. USDA 2 million. Truckloads earmarked for California, Pennsylvania farmers. Nevada. Where else here? Oregon, folks. It's all over the place. And it's going to get real interesting here. One of these days, I think you might look at a statistic saying there's going to be a record number of people missing meals. I mean, maybe that's already the case and they just haven't reported it yet, but I think that's likely in the cards in the very near future. And why is that? Because so many people have been just accustomed to getting everything handed to them, and now the punch bowl is being taken away, or the life raft. I mean, I'm trying to think of other phrases or other ways to describe this. All right, and there's very opposing views on this. Even people down here in this channel, I see your comments, and some of you are saying, yes, this had to happen. The spending was unsustainable. But yet you look at spending, and it's actually increasing, or it's outpacing last year. So are we really cutting spending? And if we're not, where's the money actually going, right? This could be a big scam, folks. And this could be a way to just bring down the economy under the guise of, oh, we had to cut spending. Other people say that this is good because this is going to bring on the collapse, and the only way to recover and get everything back on solid footing and a solid foundation is for a collapse to happen. And a collapse is going to be a lot of people that get hurt, and that's just the way some people look at it. All right, so like I tried to point out in my previous video, to some people, this news that I've been putting out here is great news. Other people, it's doom and gloom, and it's negative. I just look at it as economic reality. Take it for however you will. And something else that's pretty interesting. Canadians are pulling back on U.S. trips, threatening to widen the United States $50 billion travel deficit. Well, it's pretty cold in Canada. Don't you want to come down here in the U.S. and go to Florida and go to some of these warm states? I guess not. Trips from Canada to the U.S. are dropping, threatening with that $50 billion deficit. We'll no longer have to endure the inconvenience of international travel when Canada becomes our 51st state. Oh my gosh. Sorry, Canada is not for sale. Several other countries have issued travel warnings considering going to the U.S. Canadians are skipping trips to the U.S., and visitors from other countries could soon follow, threatening to deepen the United States travel deficit. Experts say they're pulling back for a variety of reasons, ranging from unfavorable currency exchange to the political climate in the U.S., and of course, the tariffs. Anyways, is that really going to put a dent in what's happening here with these people not traveling? And the airport's going to be empty, right? I don't think so. I think there's going to be still swamped airports, record travel, because people still have credit to spend. They still have limits on their credit cards that they haven't maxed out yet, because banks, remember, are not tightening. Most banks are not tightening. They're actually loosening, meaning they're extending these credit lines or increasing the credit limits, allowing people to go further into debt, folks. That's the backbone of all this. Once the banks stop allowing people to go further into debt, which back in the 2008 days, they would have, right? With delinquencies now being worse today than they were back then. Back then, banks were very cautious because the housing market started the big scare. Remember, it started in the housing market. Well, none of the banks are scared right now, so people still have money to spend, folks. So could be massive inflation, and that could be actually the worst case scenario. Even though deflation is bad, massive inflation and stagflation could be even much worse. What are we going to see? Let me know down in the comments. All this information, just try to use your discernment, and let me know what's going to happen down below. I'll be reading your comments. As always, keep stacking. We're going to get back into more investing and strategies in our next report. Please make sure you're subscribed right here with this little button down in the corner, and we'll talk to everybody very soon. Keep stacking. Bye for now. Peace.